Stay informed on earnings trends and analysis in Zacks Earnings Outlook.
We're into the Q3 earnings season now, and generally it's a good one. There might be a couple of bumps in the road that have already been detected by our research director, Shiraz Mian, who joins me now. So, first of all, just on general terms, it's going to be another solid earnings season?
I hope so, and I think so. The lead up to the earnings season gives us plenty of confidence that the trend we had been seeing over the last few quarters of positive earnings growth, of fewer negative estimate revisions, should continue into this earnings season too. So yes, I'm reasonably confident.
All right, here's one of those bumps in the road that I just spoke about. Big banks reported first. The reports are in. You were not overly impressed.
Yeah, the big banks have been doing very good lately. So growth has been very good. The proportion of these banks beating estimates has been fairly high as well. It's nothing impressive this time. So they are not bad, but they are not great either. And I have a slide here to share with viewers to just put this comment in context. So we have about a third of the finance sector's market cap in the S&P 500 has reported results already. The few financials that have reported happen to be some of the largest companies in the index as well. So total earnings for these companies are up 7.2%, and total revenues for these banks are up 1.9%. 85.7% are beating EPS. 42.9% are beating revenues. And as you could see in these comparison charts, the left-hand side shows the growth comparisons for what we have seen, and the right-hand side compares the proportion of beats. And you could see it's a mixed bag. Growth is below what we had been seeing from the same banks in other recent quarters. Positive EPS surprises are a bit more numerous, but revenue surprises are below historical levels. So it's a mixed bag, not bad, but not necessarily great either. A lot of the issues that we heard about in the run-up to this earnings season were confirmed. Net interest margins were better. We knew that. Trading revenues would be weak. That got confirmed. Investment banking was so-so. The core banking business benefited from these higher net interest margins, but loan portfolios continued to decelerate, and that's what we saw from the big guys. Now we'll see if the regional banks confirm those trends or not.
All right. Well, so far this year, it's been a mixed bag, but how is that reflected on the scorecard?
Okay. So stepping back from financials and looking at the S&P 500 as a whole, I have the slide, and 33 S&P 500 companies have reported results thus far. 13.1% is the growth tracking for earnings right now, and 6.4% is the revenue growth tracking for these 33 companies. I have provided a similar comparison chart as I did for financials earlier, and as you could see, growth is tracking about in line with what we saw from these 33 companies in the previous quarter, which was a pretty good quarter, and are tracking better than historical levels, as the left-hand chart shows. The proportion of positive surprises is about in line with what we saw in Q2. Reminder, Q2 again was a very good quarter, and better than historical periods. So nothing to tell us at this stage that we are doing anything worse or bad relative to the pretty strong showing we had in Q2.
Let's take a look at tech here for a minute. So far this year, tech has had a good run.
That's right.
Information technology companies tend to post the largest gains in the third quarter of the year. Is that going to be true this time around?
Yes. We don't really have enough data for tech stocks yet, but the expectation is that earnings for the tech companies in the S&P 500 are expected to be up 9.7%, almost 10%, on 6.7% higher revenues. This would follow double-digit earnings growth in Q2 my sense is that when all is said and done, tech will have a comparable growth pace that we saw in Q2. So yes, very strong showing from tech in recent quarters, and I strongly believe we should see continuation of that trend in Q3 as well. One additional point on the revisions front, as our viewers know, estimates for the companies usually come down as the quarter unfolds. The same happened for Q3 as well. Estimates for Q3 as a whole came down. Tech was amongst the handful of sectors that held on to its growth expectations. So that should give us confidence that tech should come up with good, strong earnings in Q3.
Growth-wise, what are you looking for overall this quarter?
Okay, so it's the overall growth picture for Q3 is nothing very impressive. I have highlighted the 2.3%, which looks very small relative to what we saw in the last few quarters, but nothing to be alarmed by that.
Yeah.
It's a question of comparison, so we are comparing the Q3 16 with Q3 17. We knew all along it'll be a relatively low growth quarter. Most likely we'll come up better than this. That's how it always happens. 2-3 percentage points, the growth picture usually comes in better than what is expected at this stage. So when all is said and done, I would think the Q3 growth should come in around 5 to 6% year-over-year growth, which would still be about half of what we saw in the first 2 quarters of the year. But as you could see, this chart also has the growth expectations for the coming 4 quarters, and growth is expected to rebound into high single digits, even double digits later in this 4-quarter period. So that's the big picture view for corporate earnings, at least for the S&P 500.
All right, so you also track small cap companies.
That's right.
So what's going on there?
I have a slide for that too, Terry. It's my lucky day. So this is very interesting on the small cap side. Unlike the large caps, where positive growth resumed towards the end of last year and has continued thus far, the small caps have been struggling on the growth front. And Q3, the September quarter, would be the first double-digit growth quarter in a long time. In fact, over the last 4 quarters, 3 were negative growth. Over the last 10 quarters, 6 were decliners. So it's very interesting that earnings growth is resuming in Q3. And with a lot of strength, and the expectation is that this momentum, as you could see in the chart, is continuing into the last quarter of the year and then into the first half of 2018. So a pretty positive growth outlook for the small caps here onwards.
So all that said, are Q3 earnings going to help drive this market higher?
So that's the big question. And my take on that is that the earnings picture for the large caps, at least, had been positive and constructive for quite some time now, to the extent that the Q3 earnings season confirms and reiterates that picture. That should help the market, not necessarily push it higher, but should help it sustain those gains. And it's not so much the performance for Q3 results, but what the Q3 results tell us about expectations for Q4 and beyond, which will drive the market. This could be very pronounced for the small caps, though, as I showed in the slide. If this positive growth momentum that the market is banking on is confirmed this earnings season, this could give a big boost to the small cap stocks, which have struggled this year. They have come back over the past month and a half because of these tax cut expectations. But on the whole, they have struggled. And if the small cap earnings picture turns out to be as good as my slide shows, that should be positive.
Yeah. So along that same line, let's talk about Q4 and beyond.
Sure.
There's talk on the street that the Q4 earnings season and the year-end 2017 results may not be as good as everybody thought. But your last couple of charts here don't seem to confirm that.
I don't have the crystal ball that those guys have. I'm just looking at expectations today about what is expected to happen in Q4, and sitting today looking at Q4, the expectation for the S&P 500 is for earnings growth to be up 9.1% on a year-over-year basis. One interesting tidbit about the Q4 expectations, which is very unlike that typically happens. This 9.1% growth expectation for Q4 is actually a small bump from what was expected the last couple of weeks. So this may be just an outlier element in our data, but if that confirms and remains in place, if estimates for Q4 start going up as we see more of these Q3 results, that could be a very big shift and will be totally opposite to the street and the argument that you were telling us about.
Yeah, well, time will tell.
Time will tell.
And I'm sure you'll be keeping an eye on that. In the meantime, as we move through this Q3 earnings season, don't forget, you have two types of commentary from Shiraz on our website, Zacks.com. Every Monday, you have his earnings preview where he recaps a little bit about what's happened up to that point, talks a little bit about companies expected to report in the given week, and then generally about Thursday or Friday of each week during the season, you have his earnings outlook where he really talks about what's going on in the big picture regarding earnings. With Shiraz, I'm Terry Ruffalo.